Accountants record adjusting accounting entries during the month close process to fine-tune the company's financial results to ensure that the financial statements comply with generally accepted accounting principles, like, for instance, the revenue recognition and the matching principles. As part of this process, the accountant reviews all of the balance sheet and income statement accounts and adjusts the balance as required to ensure that the financial statements reflect the accurate financial results. In this video, we'll review the concept of prepaid expenses and the step-by-step process the accountant follows to adjust prepaid expenses and update the related balance sheet reconciliation. Adjusting entries in accounting typically fall into the two broad categories of deferrals and accruals, and prepaid expenses are classified as deferrals. At month end, the accountant reviews the balance sheet reconciliation for these prepaid balance sheet accounts to determine if any of the amounts should now be expensed, meaning moved from the asset side of the balance sheet to an expense account. So let's look at such a balance sheet reconciliation that was prepared as of November. The balance sheet reconciliation reconciles the general ledger balance to the subledger balance of the accounts. The balance sheet reconciliation typically has a cover page that shows a summary of the reconciliation and additional tabs for the supporting documentation. Here's the cover page of the balance sheet reconciliation that shows us the prepaid expenses as of November 30th for $1,155,000. We can see from the detailed listing of the subledger reports that we have prepaid rent, prepaid advertising, insurance, subscriptions, and trade show expenses that combined accounts for a total of $1,155,000, which also matches the general ledger balance. The accountant reviews all supporting schedules for this prepaid account to determine if any of the deferred expenses should now be recognized. The prepaid rent schedule, for instance, tells us that the prepaid rent is for a new rent agreement that starts on January 1st. So the amount will remain in this account until January. There is no change needed for December. Next is the prepaid advertising support schedule. As of November 30th, we had $287,400 in prepaid advertising. When we look at the header, we can see that the prepaid costs are spread over multiple months and that the balance of $287,400 is for December to May. Since we're working on the month of December, we now need to recognize the amount of $237,400 in the December column as an expense. We'll do that by debiting advertising expenses and crediting prepaid advertising. Now we're looking at the prepaid insurance support schedule. As of November 30th, we had $123,500 in prepaid insurance for professional liability, general liability, and business owner insurance. Just like the prepaid advertising schedule, we can see that the prepaid insurance costs are spread over multiple months and that the balance of $123,500 is for the 3 months of December to February. We're working on the month close of December, and now we need to recognize the amount of $41,166.67 for December as an expense. We'll do that by debiting insurance expenses and crediting prepaid insurance. Now we're looking at the prepaid subscription support schedule. As of November 30th, we had $12,000 in prepaid subscriptions. Just like the prior schedules, we can see that the prepaid subscription costs are spread over multiple months and that the balance of $12,000 is for December to February. We're working on the month of December, and now we need to recognize the amount of $4,000 as an expense. We'll do that by debiting subscription expense and crediting prepaid subscriptions. The last supporting schedules for prepaid trade show expenses. As we review the listing of prepaid trade show expenses, we can see that all of the expenses are for the following year. So we don't need to make any adjusting entries for the prepaid trade show expense account. So let's summarize our adjusting entries for the prepaid accounts. These are now the adjusting entries that need to be uploaded to the accounting system and then approved and posted by an authorized individual, which could be a manager, director, or controller. The total adjustments to our prepaid accounts are $282,566.67. That means that once posted, the adjusting entries are reflected in the general ledger as reductions and should have reduced the balance of $1,155,000 to $872,433.33. So let's check the general ledger report for December now. When we run the updated general ledger report, we see that the total prepaid expense general ledger report shows $2,319,483.33. So let's review the detail for each of the prepaid accounts, starting with prepaid rent to identify why the general ledger balance is different than what we expected. The prepaid rent expense is unchanged with $15,000. The next account, prepaid advertising, shows 3 rows of activity. On 12/5, there is a debit of $1.2 million for television advertising for January to June. The next row shows print advertising for $28,400 for February of next year. And the third row shows the adjustment that was recorded to recognize the December advertising expenses. When we look at the next account for prepaid insurance, we can see that we also have 2 new prepaid insurance policies, as well as the adjusting entry for December insurance expenses. The prepaid subscription account shows 3 new prepaid trade magazines and the adjusting entry, and the prepaid trade show expenses account shows a payment for $200,000 for the trade show in London. What this activity tells us that we need to update the prepaid support schedules to reflect the new prepaid expense activity and tie those supporting schedules out to the general ledger. The prepaid rent account did not change. So the first support schedule we need to update is the prepaid advertising schedule. I've added 2 new rows for the television and print advertising and extended the columns to include the amortization for these amounts. I also updated the total column to reflect the new date, which, by the way, I did for the header as well. The formula in the total column also had to be updated to only reflect the amounts for January to June, which leaves us with a total of $1,278,400, which is also what the general ledger shows. The next schedule, support schedule we need to update is the prepaid insurance schedule. I've added 2 new rows for the new insurance policies and extended the columns to include the amortization for these amounts. I've also updated the total column to reflect the new date, which, by the way, I did for the header as well. The formula in the total column also had to be updated to only reflect the amounts for January to June, which leaves us with a total of $97,383.33, which is also what the general ledger shows. Next up is the prepaid subscription schedule. I've added 3 new rows for the new trade magazine subscriptions and extended the columns to include the amortization of these amounts, and updated the dates and formulas like I did with the other schedules. The total for the subscriptions is now $11,600, which is also what the general ledger shows. The last support schedule that needs to be updated is the prepaid trade show support schedule. I added the $200,000 in prepaid trade show expenses for the trade show London to the existing amount, and the total of the schedule now reflects $917,100. So let's update the cover sheet to make sure that the prepaid account reconciliation still balances. We finalized the balance sheet reconciliation cover page to show the new general ledger balance and the amounts from all the supporting subledger schedules, and find that they all balance. Now it's time to review all schedules one more time and ensure that all dates are correct, and then sign and date the reconciliation. I hope this video was helpful and you now feel more comfortable with the process of adjusting deferral entries and the process of updating the related balance sheet reconciliation.